when we look at our overall profile of gifts we're receiving, cash still tends to be number one.
Yeah.
I don't think cash is king, though. I mean, when you look at people's portfolios, it's often in securities, it's in alternative investments. People have real estate, they have private business holdings. Cryptocurrency is a hot topic. We can accept cryptocurrency as well. And so we definitely have a deep dive, a conversation into, okay, you want to make a large gift, whatever that number is, meaningful to that donor. Are there other ways that people can make those gifts? Something else that we've also seen is gifts from retirement accounts. So there is something known as the qualified charitable distribution, where people can take money from an IRA, direct it straight to charity. They don't have to realize that money is income. It satisfies some or all of the required minimum distribution, and they don't, like I said, don't realize it as income, but that's a better than a deduction anyhow, because you're not really realizing it above the line, and you're still satisfying what the government says you need to do. Once you hit age 73, you have to start taking a required minimum distribution. And so we also have to be poised to know some of those rules and all of that. So we do realize a lot of cash. I see the IRA gifts are a top contender in that space. Securities are also, with the markets the way they've been lately. People are giving a lot of cash, especially when they have a low basis. You know, you can give, or I should say securities. When they have a low basis, you can give the security, maximize the level of that gift, because you're going to get a deduction based on the fair market value. And, that gift only cost you a little bit, maybe 10, 20 years ago, or however long they've been holding it. So we have a deep dive and discussion about those different assets.
Yeah, so it seems like, you've already touched on quite a few of them, but there's quite a few tax advantages from a tax planning perspective that people can take advantage of if they want to give to the foundation, to the university.
Yes.
Awesome.
Yeah, so we are a qualified not-for-profit corporation, and so there's ways that people can definitely maximize their tax or minimize their tax burden, maximize the impact. And so as a gift planner and as a certified financial planner, I need to know the rules and the IRS code as it relates to that. I should say, full disclosure, or giving a disclosure, I cannot provide advice. I am a fundraiser. So we like to collaborate with the donor and their advisors, and making sure that their advisors are their go-to, whether that be a financial advisor, income tax person, or estate planner. We want to make sure we're surrounding them with all the help they need, and we're just kind of, I'd like to think, the cherry on top in helping them with that. Because as I went through the certified financial courses and earned that mark, a little sliver was charitable planning. It was kind of baked into stuff, and I would get excited when that came up, because it's like, oh, finally something I actually know and work on all the time. But let's go through some of the benefits. So gifts of cash, if you itemize, you can take a deduction up to 60% of your adjusted gross income. If you're using appreciated securities, you can take a deduction up to 30% of your adjusted gross income. Same with real estate. So appreciated land, 30% of your adjusted gross income. Tangible personal properties, so collectibles, artwork, stuff that people want to donate, that's a little different. That has a max of 28% of your adjusted gross income, and then if you're a higher income tax bracket than that, it's still just capped at the 28%. And so we look at that definitely, and try to help people with maximizing that. The other aspect is you can take a deduction in the year you make a gift plus 5 years going forward. So you have 6 years of using that deduction. If, some donors are giving more in a single year now because the standard deduction is so high that, they want the tax benefit. Give a little more this year. Maybe you'll skip giving next year, but you at least get to take that deduction, minimize your taxes. And
I was going to ask, with the increase in the standard deduction over the last couple of years, has that impacted giving? Have you seen?
We've been really blessed in the fact that our donors continue to be very generous. And when you look at the list of reasons why people give, tax incentives are low. They're not even on the top 10. I mean, people are giving because they care about students and they care about faculty. They want to help perpetuate the amazing place that the University of Illinois is. So we need to know about the tax incentives. I have not noticed a slowdown. I mean, we're really fortunate.
That's great.
You know, I'd love if we'd also find ways to bring up our quote unquote lower level donors and show them ways to continue to give. It seems like there's been a trend, and if you look across the board, what gets the news? Oh, this $1 billion gift, which is amazing. Like, that's awesome.
The
like that what they did all in
gift
Brooklyn. Was it Brooklyn, right?
It was Brooklyn, yep.
Incredible.
Oh,
and those are
absolutely.
going to get the headlines and deserve to, and hopefully that inspires other people, whether you can give $1 billion or $100. Like, if every alum from the University of Illinois gave $100, like, I might be out of a job because they're all giving, but I mean, that would have a ripple effect and make a huge impact in students' lives.